How is this going to impact the macro Bitcoin mining landscape?
I think this is a question on everybody's mind. I'm not a prophet. I'm just going to give you kind of my 2 cents on it. What I am seeing is that AI at this point seems to want to gobble up energy. And so that idea of proof of work becomes visceral and it's just a better experience. You get more sats or fractions of a Bitcoin for your dollar, and you get a sense of sovereignty and ownership in that you're getting them directly from the network.
Hello, dear friends, and welcome to another episode of the Bitcoin Economy Podcast. Today is my great pleasure to introduce you to Kent, CEO of Sazmining. Sazmining is one of our partners here at Maestro and Mezzamine, and we're so excited to get in deep in the weeds of Bitcoin mining, the operations, what's happening with the mining and the mining ecosystem, and how you can get involved too. So, without further ado, please enjoy this podcast with Kent. Why Bitcoin mining? Why are you guys choosing to acquire Bitcoin by mining? What makes that special?
Yeah, so this kind of this is going to be a long and winding road. So I came from rooftop solar, worked actually out of the Bay Area for a publicly traded solar company. So got a background in energy, undergrad in computer engineering, and sort of met Bitcoin in the Sacred Valley of Peru and just had this aha moment. And fast forward, also around the same time, fell in love with a Portuguese woman. So life restarted in Portugal 2016. And entrepreneur journey, it's been a long and winding road, let's just say. But the reality is that mining is just the best way to get your Bitcoin. If you believe in Bitcoin is better money, which I do, I think even just today, there's a lot of doubts. It's kind of at an extreme right now with gold, which is nice because now Bitcoin is competing with gold instead of the US dollar as the best form of money. People have already sort of unpegged themselves from the dollar at this point, right? Because it's now the global reserve. Gold is the global reserve asset, just overtook gold, US dollar treasury assets, which back the dollar in the last couple of weeks here. So people have realized, hey, dollar is not where it's at, gold is. And now the conversation is in between Bitcoin and gold, and eventually people will realize, having the material aspect of gold means somebody's got to be trusted to count the gold and make sure it's actually gold that's in the vault, and that's not auditable the same way that all the Bitcoin can be every 10 minutes in the Bitcoin blockchain. So Bitcoin is just better money, and if you get Bitcoin by mining it, you're getting Bitcoin directly from the network, which means that you're getting it at cost instead of buying it with a markup on the secondary market. And you're able to participate in securing the network. And so that idea of proof of work becomes visceral, and it's just a better experience. You get more sats or fractions of a Bitcoin for your dollar, and you get a sense of sovereignty and ownership in that you're getting them directly from the network. And so for those reasons, we're seeing adoption from clients like all over the planet. So what we do is we don't mine for ourselves. We're somebody that's selling the picks and shovels for this digital gold. And we do that by bringing software as a service to Bitcoin mining. So we're the first in the world to build a software platform that attaches to data centers. And people can show up on our website, buy a mining rig, have it deployed, and mining sats that are streamed directly to their wallet in a fairly short period of time. And, we've been talking with you guys, Mezzamine, about value can add to that experience on behalf of our customers, and I can jump into that. But it's a fantastic approach that is going to compete with the exchanges over time, because there's going to be a point at which Bitcoin is not going to be readily available on exchanges, and people are going to need to earn their Bitcoin instead of buy their Bitcoin, and we're building that on-ramp for the future.
Okay, all right. So much to cover here, so much to unpack. But before we dive into the specifics, I have to ask: discovering Bitcoin in Peru. Can you dive into that a little bit more?
Yeah, no, it's sort of a funny story at this point. So I did rooftop solar out of the Bay Area, and I always had a dream just as I was growing up since being a kid, and it was on because I was surrounded by these books of this like old family, somebody in my family lineage that had gone on these crazy adventures around the planet in the early 1900s, like one of the first like American adventure travelers in
Whoa.
1915, 1920. So I saw pictures of this guy growing up as a child, and I knew like at some point I wanted to go see all these places, you know. And so I got to a point in my career where I was an executive in rooftop solar, had a bunch of pennies or shekels shoved into the piggy bank, and was overly stressed out because I was in charge of nine-figure revenue targets, a 100-person team, software folks, and also post-acquisition because we were acquiring companies. I was integrating them into the greater business. I was traveling all over the place, living out of San Francisco. I was just burnt. They brought a new CEO in, and I was like, "All right, this is the right time. I'm jettisoning myself from this organization. Go see the planet." So I threw on a backpack and travel for 2 years, and it was in
Wow.
Peru the second year of my travel when I finally decided to slow down a little bit because I was moving at just too fast a pace the first like 18 months of that. But I got a rental in like a room rental with a couple of other travelers in the Sacred Valley of Peru, and had free time. So I was just going down different rabbit holes online and bumped into Bitcoin, and it just sparked my curiosity and imagination. And just it was weird because actually I didn't fully understand it until like a couple years later.
Okay.
But there was something about it that was it scratched this itch that I just couldn't stop scratching. There's something true and real about it. And the more I kept looking at it, the more it sort of like emerged into view. And I was just like, oh no, there's truth here. There's reality here. This is where bits meets bytes, and they intersect. And that's was the same thing that drew me to computer engineering in the first place because I like where bits meets bytes, that space. So I don't know if that makes sense, but it's basically where computer engineering was where electronic circuitry interfaces with software. So it's where literally the bits that are going through the transistor actually are tying to the physical reality of electrical circuitry, right? And Bitcoin mining is the same thing, but instead of transistors, it's ASICs, right? That are that sort of interface between digital money and physical reality.
So I guess going to a timeline here, and correct me if I'm wrong, but Sazmining came about officially in 2022. When did you decide? When did you decide to make the leap? Okay, like I'm going all in into Bitcoin.
Yeah, no, okay. So, yeah, I got to back up a little bit. So, SAS mining officially started 2018. So, a
Okay,
few years
2018.
earlier than that.
Wow.
Yeah, 2018. I joined in 2021 and helped the original founder raise capital and then pivot the business
Mm,
and became a co-founder through that process. So, late stage co-founder is how I fit in. Before that is a whole different history, different chapter of the company. I think of it now because I didn't live that experience as kind of the wander through the wilderness to get to, okay, we got pre-seed capital and now we're going to build something. And as far as the entrepreneurial journey, really, I rode the 2017 cycle, paid for my transition to Portugal, and starting life there, house, uh, marriage, typical American dream. Why picket fence and everything, genuinely, but in Portugal. And I knew after about a year of that, getting the family started, that I needed to earn a wage for us, and I
yeah.
was in a privileged enough position to say I want to try my hand at entrepreneurship, and so I started that journey in probably 2018 to 2019, kind of trying my hand on it, and then got serious about it by 2020, and then discovered SAS mining late 2020, and that came about by reading a book called The Price of Tomorrow by Jeff Booth, who
Okay.
talked about the convergence of solar with Bitcoin mining, and I just realized, oh my gosh, I tried all these other entrepreneurial activities without success, but just realized like, oh, I belong in the mining sector. I've got energy background, computer engineering, networking skills, and now I've actually studied money. Like this is just what makes sense is to be there.
Okay, so I think you are a perfect person to ask about this. I think one of the cool parts about Bitcoin and that people love is that there's a direct tie between energy and and money, right? The thing that's different with Bitcoin versus Ethereum or other cryptocurrencies is it's actually tied to real physical asset, which is energy. Can you talk a little bit about just how this process works and how energy really plays into Bitcoin mining and how you think about it too as a mining operator?
Yeah, so you're talking about proof of work, and it
Yep.
is the fundamental thing that makes Bitcoin uncopyable, right? So we are used to everything online being right click copy, right click paste in a different location. You cannot do that with Bitcoin because it's inextricably linked to energy. And how that actually is tied together is through the process of mining. So mining does two functions. Just for the time being, just think of a miner as just a block. Just think of it as a black box. You don't need to know how it works inside, but I'll give you the core function. In the same way that most people don't understand how a combustion engine works or how an electric motor works, just think of it as that same black box in your head. You need electricity, you need an internet connection,
Hmm.
and that's it, right? And the
Okay.
black box runs. And the internet connection connects you to the Bitcoin protocol. The electricity runs the mining rig. Now, the output from that is Bitcoin sent on the Bitcoin network for mining. So, again, don't forget about how that works for just a
Hmm.
moment. I'll come back to it. But the purpose of mining for the protocol itself, so Bitcoin is a protocol. Now, a protocol is USB. The electrical outlets that you've got are a standard protocol, like you have USB or a standard American wall sockets where you are there in California, I believe, Davis.
Yep.
So, protocols are neutral, right? They're just a simple way to define something that we all agree on, and that's how we're going to use. So I say that very specifically because there's a lot of emotional baggage around Bitcoin, which is interesting because I've never heard anybody get upset about USB or HTTP, but
Hmm.
that's the equivalent, right? It's a protocol. Now, that protocol, though, is a decentralized ledger. That's kind of the major thing that Satoshi Nakamoto developed was the decentralized ledger. So that's one side of the coin of Bitcoin. The other side of the coin of Bitcoin is a decentralized money printer, which is what Bitcoin mining is. And Bitcoin mining secures the decentralized ledger. And it does this because it consumes energy to solve a lottery ticket situation, basically. So the only way that you can solve this is by running trillions of calculations per second. And the reward for doing that work, that's what the black box is doing, is more Bitcoin. So that's how Bitcoin comes in to the protocol. And why there's a hard cap of 21 million is because the protocol defines when that Bitcoin gets produced. So there can never be any more than 21 million. And the energy that it takes to do that lottery ticket guessing. So like, hey, cool, I've got 1 in 300 billion shots at getting that reward. You do get the right number, you get the reward. So Bitcoin gets put into production, and at the same time the ledger itself gets secured. So mining secures the ledger because it creates the next block in the blockchain, and that's where the transactions are, is in each block, right? And then it sends out the block. It gets rewarded. The miner that successfully got the lottery ticket number, so to speak, gets the reward, and a block of transactions is secured on the decentralized ledger. And what that means is, because Bitcoin itself is a self-referring system, right? There's nothing from the
Hmm.
outside that is coming into it. What each transaction is doing is simply shuffling Bitcoin from one address to another. So if I'm sending you Bitcoin, I send a transaction, a miner picks it up, puts it into a block, spends a whole lot of energy trying to guess a lottery ticket number. It does, gets rewarded with some Bitcoin, and that's how the Bitcoin gets emitted into the ecosystem and is hard capped at 21 million. And at present, we're about 20 million of the 21 million, and the last Bitcoin won't be mined until 2140. That's mathematically defined. So what you've got is perfect money, basically. And perfect because it's secured by energy,
Hmm.
it's mathematically constrained, and it uses encryption to do all this. And if you're going to compare perfect money to what has been the alternative, which is primarily USD until the last couple of weeks, the US dollar. Over on that side of the ledger, the US dollar has been a narrative since
Mhm.
1971. There's no connection to the laws of physics, right? There's no energy connected to it. It's just 12 people sitting around a big long table, the Federal Reserve, that push a button and make more zeros in a ledger. And then the US, the full faith and might of the US backs that ledger. So the U.S. military largely, and the political apparatus that sits on top of it. So you've got mathematically constrained money that it uses energy to secure it, and encryption, compared to politically motivated money backed by violence.
Yeah. Yeah, it is interesting. I know in the 1970s when the dollar went off the gold standard, something kind of interesting. Everyone was expecting like a big collapse, but I think like the purchasing power actually went up. Ray Dalio has this big piece about it where he like predicted it wrong. So anyways, people are weird about money, and we do need like a global system. And I do agree, Bitcoin is that hard money. But I do want to drill in a little bit deeper on energy specifically. So, as an operator, and you don't have to give me anything specific to Sazmining's operations. We'll get more in depth on specifically like what you guys are doing and what's different. But as an operator, what percentage of the cost of Bitcoin mining is attributed to energy, and like roughly what are operators looking to like what discount relative to the value Bitcoin is typically trading at against the dollar are operators acquiring Bitcoin? So help me think about the financial picture.
Yeah, so the financial picture is, hey, if I can't produce Bitcoin for less than I can buy it, why am I mining? Right? That's
Yeah.
just full stop. And so, what are the costs that go into it? One is the hardware, and two is the electricity. Now, the hardware, you got to break this down a little bit, and so I'm going to actually use a anecdote or metaphor that I think works best for mining, which is to think of it as a manufacturing process. So,
Okay.
excuse me. So in any manufacturing process, there's a supply chain with inputs and outputs, right? So on one side of the supply chain for Bitcoin mining, it's raw energy, right? So this isn't electricity, it's energy. And on the other is Bitcoin sent to a wallet address. And in between, there's different parts of that supply chain. So somehow energy exists. Now, whether you're splitting an atom, whether you are harnessing water falling, whether you're harnessing wind blowing, whether you're harnessing photons being emitted from the sun, all of those are different valid ways to turn energy into electricity. So you need power generation as kind of the beginning. Power generation, though, doesn't necessarily connect directly to a Bitcoin mining rig. So what you need is usually transmission distribution before. So transmission is big, high electrical lines. Distribution is, hey, we're going to bring it down to a usable level of electricity. So that's usually the green boxes on the ground. And then you need some sort of data center. Now, whether that's containers, whether it's a warehouse, you need that set up with infrastructure to distribute the electricity in that physical space. And then you need racks to put the mining rigs on and networking apparatus. And then finally, the mining rigs go in there.
Mhm.
Now, that whole data center infrastructure, it could also be co-located right next to the power generation, but usually there's transmission and distribution in between. So there's people that come in to this parts of the supply chain and say, cool, we want to set up and generate power. Okay, there's other people that want to set up and build sites. There's other people
Mhm.
that want to operate those sites. And then there's other people that want to simply harvest the Bitcoin. And so they put miners on the site. And the people that operate the site those miners might be theirs, right? So they self mine or they host other people, is kind of how it works out. So our slice in that supply chain is to contract the data center with rack space on it and then by contracting, creating a safe environment for our clients to harness electricity within that data center. So we contract rack space, and then fill that rack space with our clients' hardware, mining rigs, so to speak, and then they pay the electricity, but they receive the output, which is the Bitcoin, as the benefit. So as far as the financial picture of all that, now kind of explaining that bit, the production cost of Bitcoin right now is, there's charts that show this, but I haven't looked at it in like 45 days, so this might be a bit dated. But last I saw was about $70,000 per Bitcoin was what it was costing the mining industry as a whole to produce Bitcoin. And Bitcoin's price has never really gone below that. That tends to set a floor for price action, period, is the cost of production. Now, it doesn't, value is subjective. I very much believe in that. So it's not like we produce it at a certain cost and the price has to stop there. But that in general is what it is at this moment as an industry. So part of that is the CapEx, part of it is the OpEx. Right now for us, the OpEx side of it is like $50,000. We've got mining rigs available in Ethiopia. The energy cost, that's just what it is. So how many sats do you generate versus how much did it cost to generate those is about $50,000. And the gap is made up by the CapEx just spread out over 3 to 5 year time period. And now you choose to depreciate the CapEx. So when you look at the full picture, assuming that the Bitcoin price is above 70K, it makes sense to mine Bitcoin versus buy it because you get to arbitrage that difference.
Yeah, that makes a ton of sense. And um, so I guess as a cost driver, like what are the main inputs that are driving up costs? Because you of course you have to assume that back when Bitcoin was 10K, right? Like the cost to mine a Bitcoin must have been substantially lower. Is it because is it because hash rate? There's so many other miners that are coming and participating that it's more competitive, so it's like a free market that's driving it, or is energy prices really increasing, or wages increasing? What's actually going on that drives up the cost?
CapEx is what I
CapEx.
would say. Yeah. So everybody, what you can control more is the OpEx side. So there's a drive because operating, once you're plugged in, your biggest expense is your electricity, right? And so
Yep.
there's always a race for the cheapest electricity to reduce costs there. But on the front end, in order to be competitive at acquiring a Bitcoin, you're right. There's been so many more computational devices that have come online. I mean, just to give you some sense of that, like the compound annual growth rate of computation on the network, so the security on the network has been about 40% per annum. Um,
Jeez.
yeah,
Wow.
it's insane. It makes sense that it has been because the price has been even faster, and that's what you're really arbitraging is the gap between the compound annual growth rate of Bitcoin's price as compared to the compound annual growth rate of the hash rate. That's the gap that the arbitrage comes from. So when you look at it, because there's that much more computational power on there, and the third factor is the emission schedule of the Bitcoin cuts in half every 4 years,
Yep.
right? So your costs go up just naturally because the amount of units you're getting are falling naturally as more computation comes online and as the protocol ratchets down the amount of Bitcoin sent into production or sent into the network.
Got it. And now maybe can you touch a little bit more about financing? So what currently exists for Bitcoin for financing mining operations? And can you talk a little bit about Mezzamine and the partnership that we're looking to do and what that unlocks for Bitcoin miners and Bitcoin mining operations?
Yeah, so mining is where uh, in bits meets bytes for money.
Hmm. Yep.
And as a result, it's a completely new monetary paradigm. And traditional finance has not done a very good job thus far interfacing with it, I would say. The last cycle, I think, really bit traditional finance hard because they tried to do debt based financing and, in general, got out over the skis when price went sideways. And so that left, I think, a bad taste in a lot of traditional banks' desire to finance this industry. And so as a result, there's basically a dearth of available finance products for miners like us. It's very much been historically a cash-based industry, or like if you're publicly traded miners, like an equity dilution exercise to sell shares to finance your growth. So it's been great working with you, Davis, and Suresh to try to unlock and change traditional finance's mind about mining and to look at things a bit differently. So we're eager to, ultimately like consummate our first transaction here together, and feels like we're getting close. But what it unlocks for us is an opportunity to improve the client experience and accelerate sales momentum. So there's sort of two major areas where financing helps with our ability to grow. Like, we need factory space, and then we need machines in the factory to ultimately make our uh, business engine grow. And what I mean by factory space is, for us, that equates to data center rack space. Um, we need that power and just raw space to put hardware, and then we need the hardware there. And what we found is when we have the hardware on the shelves and ready to run directly after purchase, that's the best experience, and customers show back up for repeat purchases more quickly. However, the capital necessary to be able to get all that equipment on the shelf and to procure the rack space in the first place requires capital up front. So having some working capital that we can use to bring forward the factory and the machines in the factory means that we can accelerate the velocity of the business's growth.
Yeah, I think that's the part that I'm the most excited about with this is typical miner financing right now is what 50% LTV, or it's collateralized by uh, you're over collateralizing with Bitcoin by double. It's just very very constraining. So it makes it harder for miners to grow and finance their operations. The only exclusion is maybe some of the larger public miners that are able to work these sweetheart deals with the actual manufacturers of the equipment. So it sort of leaves like growth capital off the table for a lot of these like mid-size looking to get bigger miners and mining operations. So I'm curious, yeah, like from your perspective, this is going to unlock a lot. But let's just say, as we're continuing to grow and continuing to expand our partnership, what could it unlock for you?
Well, yeah, what are the potentials? And that is a fascinating question. So, I think beyond what I just said, procuring rack space more quickly and being able to accelerate the sales growth, I think that there is an alternative competitive universe with the publicly traded mining companies, with how we form capital for data centers. I think we can actually reduce the production cost through working capital. Because the third area that I see a lot of value for working capital is in financing of the mining rigs up front, right? The ability for our clients to actually take advantage of a way to utilize, like many of our clients have been mining with us now 3+ years. They've acquired a decent amount of Bitcoin. So the ability for them to be able to use their Bitcoin in a native experience to acquire more mining rigs to generate more Bitcoin creates a unique, genuine Bitcoin native yield opportunity for our clients. So that would be the other one is, yes, we can accelerate the sales cycle, but if we can reduce the upfront cost to the client, we're gonna not just accelerate, but hit an exponential curve, in my opinion.
Amazing. I'm looking forward to that for sure. Uh, okay, so taking, I guess, a step back and a step forward at the same time. Uh, looking to the future. So right now in the macroeconomic environment, and just at large, there's a lot of talk about high performance computing, HPC, and AI uh, coming to market, and AI data center build out. How is this going to impact the macro Bitcoin mining landscape?
Yeah. I think this is a question on everybody's mind. So I'm not a prophet. I'm just going to give you kind of my 2 cents on it. What I am seeing is that AI at this point seems to want to gobble up energy in safer, more high rule of law jurisdictions. So Europe,
Mhm.
North America. And as a result, it's pushing up power in those locations. AI can pay a higher power price than Bitcoin mining can to be competitive. And so that's why you're seeing a natural pivot of a lot of Bitcoin miners in the US towards AIs because there's just more profit available. Now, as a result of that, it's pushing Bitcoin miners to other jurisdictions. So there's like the rise of Paraguay, Ethiopia, Bhutan. These are places that traditional Western capital has been reticent to go into. However, Bitcoin miners are sort of the frontiers people of the energy sector, where here you have this global network that basically puts a bid under low cost energy anywhere on the planet. And so as AI puts pressure to um, on the grid in general, it's driving up electricity prices across the U.S. and Bitcoin miners are going or to the margin geographically to find low cost power to continue to remain competitive. So I see that continuing to play out for some time until power generation itself ramps up to catch up with the AI demands. And that looks like it's going to be quite some time. I mean, that even just the amount of copper that's needed to support the power needs is pretty revolutionary. And like any product, with the exception of Bitcoin, that is absolutely scarce, as the price of the good goes up, it's going to encourage more people to produce more of that good to bring the price back down because people see margin available. So I think we're in a massive power ramp up, the likes of which we'll wind up looking back on in comparison to like the oil boom 100 years ago. I think we're seeing the same with electricity right now.
Amazing. Yeah, it's wild times, and it is interesting to see Bitcoin mining, how the operations move geographically over time. Yeah, it started, I would say, primarily in the United States. Then China had a big rise in mining. Then it shifted back to the United States. Now it's going global. But it's funny to hear that you obviously are global, and maybe this is genetic, right? Maybe this is part of your genes and your makeup to be on the frontier. So it's funny that you're pioneering, but in just the 21st century way.
I actually, maybe we talked about this when we were together because I said it to a few people, but I've absolutely come to the conclusion, having grown up on the Oregon coast, with ancestors that crossed the Oregon Trail, and winding up here in the Amazon region of Peru, which is, in my opinion, very much like an analog frontier, working in Bitcoin mining, that I am just genetically a frontiersman. I just no longer try to argue or fight it. It is what I am.
Well, awesome. Well, I think this is a good place to wrap up. Any last parting words that you wanna share with our audience here? Anything about Sazmining in particular, the business, anything there?
Feel free to reach out at K Halliburton on X, and well, Bitcoin mining has been made to be sort of a mystifying experience for many. And I think if you just spend some time on our website, sazmining.com, you'll find it's not. You know, you produce Bitcoin and it costs a bit of money each month to run it, and you get it directly to your wallet. So if you want sats that are generated directly off the network, we call them wild sats, and outside of the traditional banking rails, we can help you with that. And I largely believe that in doing so, that we are building a much brighter and better future, because it's a future based on a different monetary system that doesn't have theft at the core of it, because every dollar put into production right now comes with interest that has to be paid back, and that interest has to come from somewhere, and ultimately that fundamental bit of interest at the very base of the monetary system makes all of us have to work harder and harder as inflation occurs and steals all of our time and resources, really. So if you want to participate in a better system, then it all starts at the base, which is Bitcoin mining.
Well, that's a perfect way to wrap it. I couldn't say it better. So everyone, check out Kent, check him out on Twitter, check out the website, and yeah, thank you guys for listening. Until next time.
Yeah, thank you. Yeah, pleasure being on.